Welcome to the weekly market recap with SC Securities. Let's take a look at some of the latest developments in the Sri Lankan economy and financial markets. Speaking at the Post-Budget Forum 2025, hosted by the University of Colombo's MBA Alumni Association, President Androkumara Dissanayaka emphasized the need for strong fiscal discipline under the ongoing IMF program, stating that Sri Lanka is currently operating under a probationary period with the IMF and must use the 3-year debt moratorium from restructuring effectively. The goal is restoring the country's debt repayment capacity by 2028. He highlighted that while many nations take decades to recover from bankruptcy, Sri Lanka aims for a much shorter turnaround. The 2025 budget targets an increase in government's revenue to 15.1% of GDP and prioritizes spending in key areas to drive economic growth. A major focus will be on expanding economic activity beyond urban areas, integrating rural communities as active participants in the economy. This includes supporting small and medium-scale enterprises by establishing village-level economic units. In a bid to alleviate rural poverty, the highest budget allocation this year has been directed towards education. The initiative aims to transform the school system by modernizing resources and introducing a more diversified learning approach. The government also plans to cut production costs to boost industries, ultimately providing relief to consumers. Meanwhile, public expenditure management remains a priority. The government also plans to cut production costs to boost industries, ultimately providing relief to consumers. Meanwhile, public expenditure management remains a priority with plans to review state institutions' spending to improve efficiency. The President further highlighted the role of Sri Lanka's diplomatic network in expanding global economic opportunities for the nation, expressing optimism about achieving long-term stability and positioning Sri Lanka on a sustainable growth path. The Sri Lanka's banking sector has shown remarkable resilience, bouncing back from the economic crisis of 2022. The country's recovery, faster than many expected, was driven by the $2.9 billion IMF program secured in 2023 and a successful $25 billion debt restructuring completed by the end of that year. By 2024, real GDP growth had reached 5%, the highest in 7 years, marking a strong rebound from the crisis. The banking sector has also seen significant improvements. The Central Bank of Sri Lanka reported a sharp decline in non-performing loans, with the NPL index dropping from 7.2 in the second quarter of 2024 to minus 44.5 in the third quarter. This was attributed to better economic conditions, flexible repayment options, and lower interest rates. Further declines are expected in the coming months, reflecting increased borrower resilience and stability in the sector. In a key monetary policy move, the central bank introduced a single policy rate of 8% in November 2024, replacing the previous rate corridor. This decision was aimed at stimulating lending and fostering private sector credit growth. As a result, the weighted average call money rate dropped by 50 basis points, making credit more accessible for businesses and individuals. Leading commercial banks have also reported notable improvements in asset quality. The Commercial Bank of Ceylon, for example, reduced its impaired loans ratio to 4.08% by September 2024, down from 5.85% at the end of 2023. The bank's impairment coverage ratio also strengthened, reflecting improved financial stability. On the inflation front, consumer prices dipped to minus 1.7% in December 2024, but are expected to return to positive territory by mid-2025. The central bank aims to maintain inflation around 5% in the long term, while the World Bank forecasts a 4.4% economic growth rate for Sri Lanka in 2024. Looking ahead, sustaining this recovery will require sound fiscal policies, strong investor confidence, and effective debt management. While the banking sector has emerged stronger, challenges remain, particularly for SMEs. The government's latest budget aims to address some of these concerns, and the upcoming 2024 banking sector results are expected to reflect this steady progress. Sri Lanka is expected to rely heavily on domestic market borrowing in 2025, with Treasury bonds playing a key role in financing the budget. According to Standard Chartered Global Research, the government aims to raise 2.1 trillion rupees through non-banking borrowing to cover its fiscal needs. The 2025 fiscal deficit is projected at 6.7% of GDP, translating to a net financial requirement of 2.2 trillion rupees, an 8% increase from the revised estimate for 2024. To meet this, the government has allocated 2.125 trillion rupees for domestic financing, with the majority 90% expected to come from Treasury bonds. Analysts estimate rupee bond redemption at 969 billion rupees, bringing total gross bond issuance to 2.9 trillion rupees. However, concerns remain over demand, with expectations that interest from pension and provident funds will stay strong, while cyclical investors such as banks may reduce their participation due to limited monetary easing. Looking at the bigger picture, the 2025 budget outlines a total borrowing requirement of 4 trillion rupees, with debt servicing costs reaching 4.55 trillion rupees, of which 2.95 trillion rupees is earmarked for interest payments. Despite ongoing challenges, market analysts suggest the overall demand-supply balance for Treasury bonds is likely to remain unfavorable. The United Arab Emirates has expressed strong interest in investing in Sri Lanka's energy sector, with a particular focus on green energy. The UAE ambassador to Sri Lanka, Khalid Nasir Al Ameri, highlighted this after a recent meeting with the Minister of Energy. The ambassador stated that his country is closely following developments in Sri Lanka's energy sector and views the current political transformation positively. He also noted that the upcoming visit of President Androkumara Dissanayake to the UAE will be a key opportunity to strengthen economic ties and explore investment agreements in the sector. Sri Lanka's energy minister, meanwhile, welcomed the interest from the UAE, recognizing it as a major export market for Sri Lanka and home to a large Sri Lankan workforce. He emphasized the strong bilateral relations between the two nations and expressed confidence that new investment, particularly in energy, would further strengthen these ties. The minister also stressed the importance of regional energy stability and reaffirmed his commitment to securing further agreements during the president's visit. Sri Lanka has formally requested the Maldives government to explore the possibility of using both Maldivian rupiah and Sri Lankan rupee for cross-border transactions. The proposal aims to benefit Sri Lankan migrant workers in the Maldives and enhance economic cooperation between the two nations. The request was made by the Foreign Minister Vijitha Herath during a bilateral meeting with his Maldivian counterpart, Abdullah Khalil. Discussions focused on trade, investment and regional partnerships. Sri Lanka highlighted its strong presence in the Maldivian economy, with Sri Lankan companies playing a key role in sectors such as tourism, banking and construction. Minister Herath also invited Maldivian entrepreneurs to invest in Sri Lanka, reinforcing the importance of joint ventures. Tourism remains a vital sector for both countries, and Sri Lanka is targeting 3 million tourist arrivals this year. The ministers agreed on the need for collaboration to attract more visitors to the region, while also strengthening ties in education, healthcare and fisheries. Another key topic was regional cooperation in the renewable energy sector, climate change initiatives and the blue economy. Aviation sector enhancements were also discussed, with a focus on improving air connectivity. The two ministers reaffirmed the commitment to continued support at international organizations and emphasized the need for action-oriented steps to further strengthen bilateral relations. With both nations deeply invested in economic and environmental sustainability, this meeting marks a step forward in their growing partnership. Let's take a look at this week's Treasury bill auction results. With the recent Treasury-bill auction, the 91-day T-bill rate stands at 7.61%, down by 8 basis points. The 182-day T-bill rate stands at 7.90%, down by 4 basis points. And the 1-year T-bill rate stands at 8.36%, showing down by 6 basis points compared to the previous week. Thank you for watching. We will be back next week.